Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot. The latest buzz on the D Street is what we discuss on this special edition. Today on the show, we're going to be focusing on how the commodities, the precious metals are soaring high amid the new world order and the changing geopolitical concerns that we are looking at right now. Silver prices have hit yet another record high. We're just on the seventh trading session or seventh day of January of 2026, the new calendar year, and already silver prices have soared 15% in 2026, outperforming most other asset classes already. So we will try to find out whether you should stick to this winning asset class even throughout the 2026 year as well, and whether this is the place that you should be focused on. We will also be discussing, of course, right ahead of the earnings. We are getting a lot of business updates from a lot of companies. So that will be in focus. We have Titan Jubilant Foods today that has reported Q3 numbers that will give us a sense of how the consumption trend is moving and what to expect in Q3 numbers. Then there is also a focus on the recently listed IPOs, as some of the share lock-in period is also ending there, and therefore you will see some free shares coming into the open market, and therefore there could be some pressure, as we are seeing right now on Misho, for instance. The stock is down by 5% at 173. We're also looking at Tata Capital. The 3-month lock-in has ended now, and therefore you do see some dip on that stock as well. We will be covering up everything and of course all the themes that you need to focus on for the new year. Let's welcome our guest on board. We have Prashanth Tapse from Mehta Equities now joining in on the program. Warm welcome to you, Prashanth. Good to have you with us, and of course Happy New Year to you. We've been discussing all through 2025 what kind of strategies should we be following. Now in 2026 we started off strong, and record high levels could be seen on Nifty Bank, several other sectoral indices as well. But bang comes in, another shocker from the world. Geopolitics has again taken center stage, and that's led to some more volatility creeping back onto the D Street, spoiling some of the initial party that we saw in 2026. How are you looking at the market sentiment right now?
I think good morning, Sakshi and the viewers. So we were in the very high volatile year for 2025. Again, last 7 days we have seen such kind of volatility again back in action. 3 days back we were kissing the all-time high levels in the Nifty, but again 2 days the momentum has. So I think volatility will continue for the first half of this calendar year. I think that will be more driven by US-India trade deal and the metal actions going on. So I think that will remain for the first half of this financial year or the calendar year. I think that will have some kind of volatility impact. But again, there will be a lot of new things which will be changing with respect to what India is focusing more on the earnings, which was missing in Q1 and Q2. I think the business updates which have started recently has given some kind of mix, neutral to positive. But I think the way how Titan has reacted, the way how other stocks like Sanko, Gold, and other stocks are moving with respect to consumption story. So the second half of this financial year, I expect some kind of consumption growth driven by all the policy changes with respect to GST reforms and all. So that will create a lot of support to the earning growth. And if that sustains, we will try to keep this volatility on the higher zone.
Okay, let's actually talk about the shiniest space, and that's silver. I mean, 15% of a rally already in the first 7 days of 2026, and crossing that $83 an ounce kind of a level, something that most of the commodity experts also ruled out. They were just penciling in, maybe a $77, $79 kind of a price. But look at it, right in the first 7 days, we have $83 an ounce, and the rally just doesn't stop at this point in time as well. How are you looking at silver as well as gold at this point in time? Of course, with all those volatilities that are coming along with the geopolitical concerns and, fresh kind of takeover of US, Venezuela, what has happened over the last 72 hours odd, and we've been reading all headlines that are coming in from there. How are you approaching these precious metals? Do you think these continue to remain as safe haven appeal for 2026?
I may not say it's safe haven, but again, the higher level of positivity will continue the way how geopolitical tensions are giving some kind of support to silver as well as gold. Silver has two, three reasons. Again, there is a mismatch in demand and supply, and the demand is too high, which cannot be supplied immediately. Gold, again, due to all the geopolitical tensions, the gold is creating a new high day by day. Silver, I am expecting there is a breakout above 82, which I think today's closing is most important, and that I think that will continue to 88 and 92 levels going forward. So I think silver will continue the rally, but gold may see some kind of decent, neutral to positive outlook for this financial year. So I think overall metals will continue to make good shines this calendar year as well as the financial year. But overall, the focus would be more on the geopolitical tensions. As soon as that gets cooled off, then only there may be some kind of profit booking attempt seen in these two metals.
Okay, so if I have to ask you between silver and gold also, Prashant, do you have a preference there as to where do you think there could be better opportunity in this current new year?
I think silver will continue to see some kind of good opportunities. The way the breakout of today's close is most important on technical charts. I think 82 plus closing can create another 8 to 10 dollars momentum very fast. So 90 to 100 can be a target for this next 1 or 2 months.
Okay, got that. So there you have it, viewers. Even between silver and gold, it seems to be silver that still has a lot of, kind of shine left that you could still see unfolding over the next few months and year, this entire calendar year as well. Let's actually move forward now beyond the commodities to the equity space as well. For the equity markets, the next big trigger, as we all know, is the Q3 earnings. Of course, within a few days from now, we will start seeing full-blown earnings numbers coming in. Already one or two companies have reported their numbers, but final numbers will start pouring in when the IT sector kickstarts. But right ahead of the earnings, there are some business updates that indicate what sort of earnings can be coming in, are already flowing in as well. We've been discussing that in the last couple of sessions also on What's Hot with all of you. Today we have two companies that are in focus. Titan is the first one that we are focusing on, and the next one is Jubilant Foods, and that's something that we will be focusing on as well. Titan, remember viewers, is up by 4% and it's trading at all-time high levels. And yes, this is all also to do with the kind of gold prices and the kind of sentiment is around the jewelry space as well. But let's look at the business performance that the company has highlighted. A 40% year-on-year growth in consumer business. Domestic growth 38% year-on-year. International growth 79% year-on-year. 56 new net stores that have been added in Q3, and the total store count now stands at 3,433. Let's talk about the jewelry space. That's been the clear star performer for the business updates that Titan has clearly talked about. A revenue uptick of 41% year-on-year. Higher gold prices have lifted the average selling price there for Titan. The buyer growth is largely flat, but value-led growth is clearly being seen at this point. Gold coin sales have nearly doubled, is what the company's mentioned. Plain gold jewelry is also up high, about 30% odd range. One is also seeing studded jewelry growing about mid-20s. Like-to-like growth is in still low 30% range. 47 net jewelry stores that have been added in India. That's again something that you should watch out for. Remember, Titan also has watches and eyewear division as well. So let's focus on that too. For the watches, the premium is definitely driving the growth there. Overall, watches growth stands at 13% year-on-year. Analog watches up by 17% year-on-year. Sonata Fast Track have shown strong volume growth there. Smartwatches sales, however, has slipped lower by about 26% year-on-year. 22 net watch stores have been added in Q3. For eye care, there is a steady momentum that one can see. The business up by about 16%. Strong demand for sunglasses and lenses. E-commerce definitely is supporting the omni-channel push. There are 11 stores that have been added here, 20 renovated, 30 closed. So 2 new runway premium stores that have been opened as well. So let's take an overview on Titan first now from you. Looking at all these business updates and of course the record high prices, what do you think is in the offing?
I think these numbers are already discounted in the price action. The way how the stock has reacted from last at least 10-15 days, the stock is up by almost 3,800 to 4,200 plus. So I think the expected performance was in line with the street expectations. But again, the way how the 85% of the segment growth, which is on the jewelry segment, has done well. So I think it is more or supported by the gold prices and as well as the higher gold prices turnover. So, but again, margins are slightly on the positive side. Plus, I think the same store growth is also very strong, and they have added a lot of more stores in this month. That is the month of December. So I think that is creating a lot of buzz, positive sentiments. That is creating a all-time high, penciling the prices on the charts. But again, I may not be a fresh buyer at this point of time. I think traders or investors try to book profit at this point of time.
Okay, got that. Let me also ask you, within the various verticals, which is the vertical that you are betting big on when it comes to Titan, and how do you see the projections going forward as well?
I think the jewelry segment should do well. I think the way how the marriage seasons will be very much active in the month of Jan and February. So that will create a lot of buzz in terms of the volume growth in the jewelry segment. That is one segment. But again, which is getting some kind of pressure would be the eyewear segment where continuously the growth is not being seen from last many quarters. So that will be one segment where I will be keeping and watching. And if there is some kind of growth seen in the eyewear, there will be some kind of extra premium being garnered by Titan going forward. So for me, jeweler would be the main thing which will drive the company's business model. But again, eye care can be a crown in the head of the Titan.
Okay. Next, I wanted to ask you as far as the emerging businesses of Titan are also concerned. They are also gaining some scale at this point in time, Prashant. The fragrances that have grown by about 22%, the fast track and skin that have, driven the volume growth as far as the fragrances space is concerned. Women's bags is also looking at a space of 100%, 111% year-on-year surge as well. Nearly 2 times the volume growth that we have seen for this new space as well. How are you looking at these newer businesses and how they could be considerably contributing to the overall business growth?
I think they are too late in this segment. They have entered in a very long way. But again, there is high competition that maybe 1 or 2 quarters there may be a good jump in the volume sales because of the first time introduction and all with good offers and all. But again, they are too late in this segment. There's a huge competition. So we need to wait and watch for see at least 1 or 2 quarters how these segments make good contribution to the top line as well as on the margin improvement space. So wait and watch, then we can take a call on that.
Okay, got that. Now, what we are also seeing is that many brokerages are also highlighting that the EBIT growth also remains very strong, even through the jewelry, even though the jewelry margins may be moderating due to the adverse mix. It is the scale, the operating leverage, the premiumization that's continuing to protect the profitability. How would you look at the profitability factor from here on for Titan?
I think it's decent, very decent with respect to when we see the last 4 quarters. There has been an 8 to 10% growth in the profitability that will have a decent outlook going forward. But again, the other segments should start contributing more with respect to the eyewear and all. That would be the one thing one should watch and wait and watch for Titan to grow, give good bottom line approach.
Okay, in fact, I also wanted to ask you, just last week, Prashant, Titan has announced its foray with a separate brand entity in lab-grown diamonds, Beyond. So this is for the first time. You remember in the last 1.5, 2 years odd, we've been constantly speaking to Titan management, trying to understand their own position in lab-grown diamonds. They have been talking about how they are looking at a proper way of looking at it, and finally we have that announcement coming in. Beyond will be a separate, complete, different identity that will cater only to the lab-grown diamonds there. I wanted to understand from you, a lot of people are now looking at alternatives like lab-grown diamonds because of the affordability factor. Now everybody cannot afford, diamonds, even though the prices have been falling over the last couple of years, but diamonds still are very expensive. So a similar, maybe a 1 carat or a 2 carat diamond or a solitaire there will be costing almost 20 times more than what it would cost you on a lab grown diamond. This has even led a lot of trends shaping up globally as well. Say for instance, in the engagement rings, there's a huge change in the US where people are going for bigger caratage and the kind of lab grown diamonds can provide, and that's a shift that they are noticing. Similarly, when one looks at Titan, I think the big grey area so far in terms of lab grown diamonds was how do we understand the pricing? Are these brands giving us what we should be trusting? And now Titan, which has so far always been a poster boy of trust when it comes to gems and jewelry, what do you think of lab grown diamonds as a division for them?
I think it's a great step what Titan has taken. There was some kind of brands missing in the lab grown business, lab grown diamond business. So obviously, whenever Titan comes into that business, there is some kind of comfort level with respect to quality, with respect to trust and all. So that can create a lot of buzz in the market. Because when I went to buy a diamond, there was like unknown brands which are selling the other lab grown brands. But there was a very big question of getting the right price, the right quality. So Titan getting into this phase, I think it's a good volume driven business, and I think that will add a lot of business model. But again, it's a very early stage to comment on this because we need to see at least 1 or 2 quarters how this will shape up. Plus the showrooms which will be opening in Pan India, even that plan has to be understood by the management before taking a call on the contribution towards the P&L account. So overall, this step looks very strong. I think that will create a lot of buzz with respect to volume growth.
Okay. In fact, we also have brokerage houses now coming up with a bullish take on Titan. Goldman Sachs has a bullish update with a buy rating and a target price of 48.50, citing sharp revenue acceleration, a broad-based growth across the segments. Nomura also maintains a buy rating, raising the confidence after a significant beat on the expectations of the business updates, raising the target now to 4,500 rupees. Citi still has some cautious view with a neutral rating and a target price of 4,125. It is acknowledging the strong jewelry performance and the robust execution across categories, but definitely is looking at it in a cautious way. The big picture definitely is going to be from Titan that Titan today is no longer just a play on gold. It's a branded discretionary consumption compounder with leadership in jewelry, strong optionality when it comes to lifestyle businesses, and proven ability to also scale profitability across cycles. So that's something that we are going to be looking at clearly. What's your target, Prashanth, when it comes to Titan?
I think my target is almost near to 4,400 from the this financial year, so which is very near. I think we will not be recommending a fresh buy at this point of time, but I'm wait and watching for targets to book profits.
Fair point. All right. I hope viewers, this is able to help you out as far as how to look at Titan at this point in time. Record high levels, and you can see it continuing to trade at the high point of the day as well, 4,295 odd levels, and you're seeing record high levels coming in, higher targets that even Prashanth and many other brokerage houses have also penciled in there as well. Let me also pull up Jubilant Foods there. That's another space that we should be focusing on the Q3 updates that we have got. Here, what we've seen is that the consolidated revenue they've reported is up by about 13.4% year on year. From operations, it stands at 2,438 odd crore rupees. Especially when it comes to the Domino's part, for all our viewers and for the benefit, Jubilant Food operates, a lot of Domino's stores, and that's how we, look at the QSR play of Jubilant Foods there. So the like-for-like growth stands at 5% year on year for Domino's. 75 new stores that have been added in Q3, and total Domino's India's now stores stand at 2,396. The stock has been subdued for some time. How would you really look at what is in store when it comes to Jubilant Foods after the Q3 update has come in?
I think the numbers were not in line with the market expectations. I think even there was some kind of price adjustment done from last 2-3 months. The stock was underperforming, considering the low footfall, low store-to-store business growth, which was expected by the market readers. So I think that will continue. There is some kind of volatility in the EBITDA margins as well. So there is a very difficult in this current market with respect to the competition what Domino's is into. See, local market, if you see, there are a lot of pizza houses or any unbranded pizza centers where there is a good disturbance with respect to the market competition. So that is creating some kind of negativity for the business model to grow faster what was expected. But again, I think this underperformance will continue. Even the valuations are too expensive at this point of time. Anything above 100p, and with respect to book to price to book valuation above 15x. So I think the valuations is giving some kind of missing in terms of growth. So the expense ratio will continue to be under pressure for Jubilant Foods. So my advice would be avoid at this point of time unless we don't see a good growth in terms of EBITDA margins as well as on the top line and bottom line.
All right, fair point. When it comes to the overall QSR space, Prashanth, are you looking at any key triggers or maybe the space getting into a positive zone in 2026? Do you see there was a lot of update on Devyani and Sapphire with the merger going in within the QSR space as well. How are you looking at the dynamics change and what is on your radar?
I think we have continued to be very negative on this space from last 2 years because of the high competition by brand unbranded food malls and also. I think that will keep on more pressure on all the QSR players in the Indian market. So overall, the trend will remain same. We will continue to have a negative outlook on this, despite there is a lot of consolidation happening in the KFC business model, the two companies getting merged in one. So that is the reason why they are making it very difficult to manage these two listed companies to run the business. So I think that will also give some kind of consolidation. So the whole year there may be a good consolidation on a weaker side. But again, let me see how the numbers will grow with respect to footfalls and volume growth, so same to same store growth and all. So overall, the sentiments will continue to be negative.
Okay, got that. I also wanted to ask you about the IPOs space as well. Today, we are focusing on the recent IPOs that got listed and now are seeing their 1 month and 3 month lock-in share lock-in periods end, and that's creating to some kind of a knee-jerk reaction on the stocks as well. So let's focus on Misho. 1 month lock-in period has ended, and therefore you have about 109 million shares that are floating in into the markets now, 2% of the entire equity, and the value of the current price. As this point in time, what do we see is that 55% above it is still trading on the issue price. When it comes to Misho, but today after that knee-jerk reaction, we've seen the stock slip by about 5% odd. On the post-listing high that the stock really garnered was about 254 rupees, but right now it's feeling some pinch. Let's try and understand. Misho was one of the best performers in terms of the IPOs and the post-listing gains that investors really cheered on Misho. How are you looking at this knee-jerk reaction? Is it actually giving those people an investment opportunity to buy on the dips, looking at how much the stock really moved in the first month of it getting listed? Or do you think there is still some more correction to go?
I think we need to wait and watch for more correction. I think we may be very much near to the earnings show very soon, so that will also give us some kind of understanding post IPO listing how the numbers are looking like. So on the valuation side, still looks very expensive for me. On a business model, very strong business growth. What I'm expecting from for next 2 to 3 years, it has been also called as Amazon of India. So I think that kind of business model will just really have a strong growth going forward. But yes, with respect to price action post listing, yes, there can be a good profit booking attempt seen today as well as going forward. But I will be wait and watch to see how the earnings show will come out. So that will give us a very clear understanding what was pre IPO and post IPO, how the numbers looks like. If there is some kind of positivity which is expected in the earnings show, then in the show will continue going forward. I think the stock will come down to 150, 160 levels. That can be a good level. One can start, adding fresh buy as a long-term investor.
Okay, fair point. All right. I also wanted to ask you on Tata Capital then. This has been, kind of a space that has disappointed investors. The second IPO that came in the last couple of years from Tata Group again has had some weakness to show after the listing happened, and therefore the investors of Tata Capital also had, a lot of disappointment there. The 3 month lock-in expires today. It was the biggest IPO of 2025. Now about 2% of outstanding equity now floating in. Remember, it's still trading about 10-11% above the issue price, but the recent momentum with the 6% rally that we saw last week was probably a breath of fresh air. But let's find out what goes in on Tata Capital and how do you expect the journey to pan out.
I think as long-term investors, there is no need to panic and sell at this point of time. There will be a lot of consolidation because the industry is growing slowly and slowly. I think the way how RBI is giving a lot of liquidity push to NBFC as a sector, I think that will create a lot of business model going forward at like 2 to 3 years kind of view. But again, the recent rally and if you see in December, the price was almost 330 rupees and now almost 358. So there can be some good kind profit booking attempt which we'll see due to 2 3 reasons. One is again lock-in share plus there may be some kind of very decent Q3 update or Q3 earnings expected. So before earnings, there will be some kind of a small profit booking correction, which can see as an opportunity for new buyers. I think best level would be again 330, 340 can be a level where one should wait and watch and then buy it for long term.
Okay, fair point. All right, towards the end of our conversation, now, Prashant, I want to understand from you. We are in the beginning of 2026 and we are awaiting the earnings, and then we are awaiting one major trigger that will come in by a union budget by the 1st of February. So, in the run up to that, have you already started to identify a few pockets that you're advising your clients to start building up some positions in?
I think yes, we are focusing more on the PSU as a segment where the rally has already started, but I think that will segment will give a lot of momentum this year again post the budget. There is a good momentum expected in the PSU as a segment. So in this again, PSU stocks like in the banking space, I think Canara Bank, Bank of Baroda should be focused stock. One should focus more on in the manufacturing space. I think BEL, BHEL, these two stocks should be considered more focused with respect to defense as well as on the government allocation on the sector. So very few stocks, but again majorly focused on the PSU as a theme. Again, In the new age business, I think we are focusing more on the Lenskart because I'm expecting good, strong growth with respect to their store growth. So that will create a lot of positivity in their Q3 earnings. Q2 was a blockbuster no announcement with respect to post-listing results. So I think even Q3 can be similar to that. So I'm expecting more move in the new age business model, and that is Lenskart can be one stock one should focus on.
Okay, got that. Let's also try and understand from you any kind of an opportunity that you are scouting for within the earnings band. What do you expect where the outperformance can come in Q3 earnings?
I think FMCG can be a sector where students should focus on slow and steady. The GST benefit will start coming in and giving some kind of volume growth. So I think in this space, Tata Consumer, Godrej Company Consumer, these two stocks can deliver better focused on. Even Britannia can be one stock one should focus more on based on the volume growth expected, plus getting a better benefit with respect to the recent rally before the budget.
Okay, got that. All right, Prashanth, then thank you so much for being with us on the program and helping all our viewers out identify where the buzz is on the D Street and what to focus on as well. Good to have you as always with us
Thank
on Business Today Television. 26,142 viewers, still a tad subdued, 36 points lower in trade. But let's find out how the going gets as far as this session is concerned. IT stocks have made a comeback, 1% higher. That's where the momentum is. Pharma is also up in trade. Metals are higher. Even the broader markets are showing you some gains today. On the Nifty, where the moves can be seen clearly, are names such as Titan, which is the top mover, of course, Wipro, Sun Pharma, HCL Tech, Infosys, Tech Mahindra from the IT pack, TCS as well. So IT stocks, consumption-oriented names that are holding up. But still about more than half of the stocks are in the declining trend on the Nifty. Cipla is down, Tata Motors, Maruti, Max Health, HDFC Bank, Bharti Airtel. These are all the stocks that are weighing on the sentiments, at least for now. We'll leave you at that, but do stay tuned with us on to Business Today Television. Lots more coming up on your screens. Of course, I'll be back for the 12 p.m. Daily Calls edition where we answer all your stock queries. Stay tuned for that too.